This is Japanese Economic Review Channel. Yesterday, July 16th, the Tokyo market faced a sharp reversal. The Nikkei 225 plummeted by 1,915 points, closing at 66,835, while the Topix dropped 59 points to 4,028. This stood in stark contrast to the US market, where the Dow Jones rose by over 150 points the previous day. Despite the volatility in equities, the yen remained steady at around 162.07 against the dollar, reflecting a market focused primarily on stock-specific risks. A significant macro divergence defined yesterday's trading. In the US, a 0.3% month-on-month drop in the PPI eased inflation fears and boosted tech stocks like Apple and Alphabet. However, Tokyo investors remained cautious, hindered by a quote-quote-quote semiconductor overhang and a wait-and-see approach ahead of key earnings. This resulted in a broad sell-off where nearly 70% of the prime market, 1,070 stocks, ended in the red. Yesterday's session was a tale of two halves. The Nikkei hit a daily low of 66,499 at 11:06 a.m., dropping over 2,250 points and testing a major support level. The mood shifted in the afternoon following TSMC's earnings report, which exceeded market expectations. This prompted a wave of short covering in semiconductor shares, helping the index pare some of its earlier massive losses toward the closing bell. The decline was heavy in specific sectors. Electrical machinery and financials were major laggards, with names like Tokyo Electron and MUFG seeing significant selling pressure. On the other hand, 10 out of 33 sectors managed to advance. Transport equipment, led by Toyota and Honda, and the pulp and paper sector showed notable resilience, indicating that investors were selectively rotating into value and defensive stocks amidst the broader tech rout. In the emerging markets, the Growth 250 index followed the overall market lower, yet individual high-growth stories stood out. TENTIAL hit a temporary limit-up following a strong quarterly report. Additionally, Chat Plus, on its second day of listing, soared to 2.1 times its IPO price before hitting its own limit-up. These movements highlight that capital continues to seek out high-conviction growth opportunities even during major index corrections. Beyond the indices, yesterday brought news of strategic corporate shifts. In retail, Shimamura announced a nationwide permanent apparel recycling program, and Meiji launched new IP collaborations. Technology implementation also accelerated, with Fujitsu starting its AI-driven modernization services, and Nikkei Electric utilizing quantum computing for transit scheduling. These initiatives demonstrate that the structural evolution of the Japanese economy continues unabated by short-term market turbulence. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.